All right, let me give him the host. Okay, I gave you hosting ability, so you should be
Okay,
able to now.
cool. All right. You guys see that?
Yes.
Okay. Figure out. Okay, cool. Figured out how to work it. It's been a while.
Yeah, I think they just changed it too, because I have all these different icons I've never had. I'm like, what is going on? So I think they've updated Zoom.
Awesome. So I prepared a little slideshow with some what I hope will be valuable information and stuff that'll help you guys um, overcome objections. I'd like to think of it more so as help instill confidence, right? Overcoming objections. I don't know. We want to help people understand why they should buy a house today, right? And not necessarily overcome their objections, but help them see the light, so to speak. So, um, before I dive into that, I figured you ought to know who I am and if I'm worth listening to or not. I guess you could decide after the call, but native Phoenician, been in the business for 20 plus years. I've worked in all different models. I started in a call center. I've been a suit for a major bank. I have, but I found myself now back in the broker world, which ideally is where I started. So come full circle. But have been a top producer. Have worked in all different operations of mortgage, right? Retail, banking, and I'm a wholesale broker now. And I do 20 to 40 million in annual production with no team. I've had a team in the past, and what I found is that though I was doing more business, I was losing some of the stuff that made our team special, which is the personal touch. So I scaled down. I am a one-man operation. I do have two loan processors that are vital to my success, but just know that I'm the only person talking to your clients if I was fortunate enough to earn any referrals after this call. I am 100% by referral, and that is my proudest accomplishment as a mortgage originator in this market. Um, I just got this review a couple days ago, and I just loved it. It's like my favorite review I've ever got because it's critiquing me as a person and not the service that I provided. And I just thought it was great. I've told my wife I've been working on being a more kind person, and so I was just thrilled to get a review like this. And there's a picture of my family. Um, Married for 15 years, three kids. No one in my family likes this picture because they say our hair's all messed up because of the wind, but my hair looks great. I don't know, I don't know what their problem is. So anyway, that's a little bit about me. Why you're here, and please, if anyone has any additional objections that they run into often, um, feel free to throw them out there. But these are the ones that I know I see all the time. Houses are too expensive, interest rates are too high, payments are too high, waiting for the market crash. That's my favorite one. Can't get what I can afford. Waiting for whatever reason. Want to put 20% down, whatever it is. So, um, would you all say that you run into these often? Yeah.
Oh yeah, it was a topic last night. Someone at the dinner table was like, "Oh yeah, I'm waiting for the market to crash again." And we're like, "Yeah, no, that's
Yeah.
not going to happen."
Right. Any additional ones that are common that I'm maybe missed that aren't on this list? Figured this encapsulated most of them. Okay, cool. Well, we'll attempt to answer these questions or figure out how to instill confidence in our clients. Um, Honestly, we can end the presentation after this slide because this is the mic drop. It's the To me, it's the one thing you need to show your clients to help them understand how real the lack of inventory is and what a problem it is. It's a problem so disparate that a global pandemic, complete and utter political chaos, and a potential World War III couldn't didn't do anything to help it. which typically those things would help what we need. So this is a list of homes built by decade. And as you can see, from the 50s on, we've, as a country, have built an aggregate of an average of, about 25 million homes per year. Now, in 1935, the last time that we were at 5.4, the population of the US was 127 million. And today in 2023, it's 334 million. So the population's almost tripled, but the housing production is in line with 1930s. Now, the reason for this is obviously the crash of 2008. Builders were all but taken out of the business, and for the following decade, they didn't build any homes. Now, what happened in 2020 that's not on this chart? COVID, right? Supply chain delays. I personally know builders that closed their doors temporarily just because they couldn't outpace the cost of construction. And so there's no end in sight to this. There's no solution. And so really the conversation begins and ends right here. This is why homes are so expensive. This is why you have to buy a house now. They can't catch up to this problem, especially here in our market. If we lived in a Rust Belt state or something, it's a different conversation. But we've got 200 people moving to Metro Phoenix per day. And they're not building enough houses to handle them. And so this is the reason that the home values are as high as they are, period. Now, for all those people out there that believe that this is a bubble or that home values are going to come down, I think home values are definitely going to slow as they have. What we're seeing right now is that slowing, right? But this right here is a chart of conforming loan limits. So every year, Fannie and Freddie Mac, HUD gets together and decides what is the max conforming loan limit, which is what is the max loan that we will insure. Anything above this loan is considered a jumbo loan. So this figure has a huge impact on housing in this country. And I've been in business since 2002, okay? When I first got into business, this limit was 380, thereabout. But for the bulk of my career, 10 plus years, more than half of my career, this cap was $417,000. And we didn't see any changes for a decade. And in 2017, we saw the first change. It went up almost, 2%, not even. 7% in 18, 7% in 19, 5% in 2020. And then 2022 saw the hugest 18% jump, and we just got another 12% jump. Guys, 74% increase in conforming loan limit in 6 years. This chart goes back 70 years. So at no point has it ever gone up more than like 5%, like the historical average. And honestly, it was less than 2% for most of the time that we've been in business. And you have seen a 74% increase in the allowable loan limits. So I don't think the Department of Housing thinks housing prices are coming down anytime soon. This is our new reality. And it's a result of printing cash. That's all it is. The houses don't cost more. Our dollars are worth less. That's all. Simple. But people don't understand this, and your job is to help them understand this. Unfortunately, our wages haven't gone up in step, right? It's another conversation. But I don't see why or how they would be making these kind of monumental changes. The smartest people in the industry, if we thought values were coming down anytime soon. Another big reason why, a lot of people have 2008 fresh in their minds. And I was in the mortgage business in 2008. I lived through it. I owned homes. I got foreclosed on. I got my butt kicked in 08. If anyone should be leery about this market, like I feel like I should be at the top of that list. But the reality is that this is a vastly different market than 2008, but people still have 2008 on their brains and need to understand that 2008 was an outlier that was literally caused by the banking industry, the lending industry, and the housing industry in step, right? But this is completely different, this market that we're in, you know. And we can start with loan quality. You know, the industry has been cleaned up, guys. Back in the early 2000s, if you could fog a mirror, we'd throw money at you. And you didn't, you know, we were doing 125% cash outs. Not proud of this, this is just the way the industry was, right? But it's crazy. In 2011, they completely rehauled everything. You know, TRID, ATR, which stands for ability to repay, KYC, which is know your customer, QM, quality mortgage. All these regulations and changes have been in place now for almost 15 years. And so the reality is that they nipped the problem of subprime mortgages in the bud. So the vast amount of homeowners out there are not, you know, subprime loans. The reality is there hasn't been such thing as a subprime loan for more than 10 years.
Greg, Elena has a question. Her hand's
Yes.
up.
Yes, I can we go back to the last slide? I had a question. What is exactly means by conforming loan?
So this is the maximum loan limit that Fannie Mae and Freddie Mac, who are the government-sponsored entities that insure all mortgage loans, they will insure up to that amount. So as a lender, if you write a loan and you stay under that amount, you've got protection from Fannie Mae. If you meet their underwriting guidelines, they will insure this loan if the borrower defaults. So it's a safe investment for you as a lender. If the loan amount is higher than that, it's considered a jumbo loan. The government sponsored entities won't insure it. So as the lender, you're taking on all of the risk.
So it used to be 417,000 that they were insured, but now it's 726,200, right?
Correct.
Okay, so
In
Almost
since
double.
2017, it's gone up 74%.
okay, thank you so much.
Yep, almost doubled. So that is them projecting the real estate market. How much houses cost? How much do we need to be able to lend people in order to keep the housing market churning?
Okay, thank you.
Yep. Because now the reality is housing prices have gotten so high that, you know, like a 400, like look at 2018, 450, that's like almost an entry level house now in some parts of town. You know, that was considered a mansion like 6 years ago. So home values aren't coming down. Is that good?
Yes, thank you.
Cool. So yeah, 60% of Americans have good credit these days. There's no such thing as stated income loans. Not only are they unattractive for borrowers because the interest rate's 10%, but they're unattractive for lenders. And lenders aren't going to make those loans if you have a 500 credit score. You know, there's no such thing as that. Like the only way you're getting a stated income loan is if you're putting 30, 40, 50% down, right? And so there aren't bad loans out there anymore. Just me personally, and I did this research for the purposes of this call. My average credit score, I was blown away to realize this. Average score is 740 over the last 10 years since I've been keeping track. So these aren't bad loans that are out there. So we don't have people that are, you know, living on a razor's edge that can't pay their bills. And that brings us to the next column here, which is homeownership equity. And again, guys, these are statistics that you want to throw at somebody who's telling you that the housing market's going to collapse because we're going to have all these foreclosures. Or listen, even if we have a huge economic downturn and people lose their jobs, it's going to be awful, and it's not going to take a lot of people out of the market, of course. But the reality is it's really just going to help alleviate the inventory problem because there is no other solution in sight. You're going to have baby boomers that start to die off soon. That's going to open up inventory. But other than that, listen, personally, I have a 1.8% interest rate on my 15-year loan. Okay. If I refinance to a 30-year loan today, my payment would go up, even though I'm going to a 30-year loan. So I'd love to move, but I'm not, right? And everyone else that has a great interest rate is saying the same thing. So we have no solution to our inventory problem or inventory challenges. In fact, every aspect of the market is only compounding those problems. And so anybody who tells you that home prices are coming down, you know, I don't see it, you know. I just don't see it. But this is another reason why, again, even in the event of total economic financial ruin for half the country, like you're not going to get foreclosed on. You're going to sell your house and someone's going to buy it in a weekend. And then you're going to take your $274,000 of equity and you'll probably go pay rent for a year in advance and you'll get back on your feet. Right? Will home values fall if there's nobody to buy them? Guess what? The investors and the cash buyers will still buy homes. That's not great for me, but it's great for y'all. People are going to buy the homes. However many there are, they will get purchased. And so I just don't see how the market can go down, because even if you take away, guys, the rise in interest rates has already taken 50% of the buyer pool right off the table. All of my clients that were struggling by the grit of their teeth to qualify for a $300,000 mortgage when rates were 5%, they're done. They're gone. They're toast. They'll never be homeowners without a dramatic change in income. And that's just the reality. So we've already taken half the buyer pool out with the raise in rates. And what are home values doing? Are they going down? No. You know, I think a great story, I tell this story often, I'll share it with you guys. I'll try to make it quick. But this story and captures what's happening right now. And so I had a client call me. This is probably 9 months ago. I don't know. It was right when the market started to slow down. This guy's a real salt of the earth, old, cranky old guy. He says, Greg, I want to sell my house, but I'm not going to hire a realtor. Can you help me? And I said, well, yeah, I will help you. Hire a realtor, right? But he wouldn't listen. So long story short, I told him, go get your home appraised, list it accordingly. Good luck. Here's an appraiser's phone number. So he calls me about a month later, says, Greg, I've had my home listed for sale for 3 weeks. I haven't got a single offer on it. What's going on? I said, well, I told you to hire a realtor, first of all. But you didn't listen to me. So tell me, what did the home appraise for? $345. Home appraised for $345. Awesome. How much you got listed for, my man? $390. What? What are you doing? Why would you list a home for $390 that appraised for $345? And he says, well, I keep hearing in the news that people are paying 50 grand over asking price for their home. So I just figured I'd cut right to the chase. I said, brilliant. That's why your house hasn't sold. That's why you haven't had a single call or anyone hasn't even visited your home. If you were smart, or had you hired a realtor, you would have listed your $345,000 home for $325,000. Why would I have done that? Well, you would have created the illusion of a deal, and you probably would have created a bidding situation and probably would have got over appraised value. So he went and hired a realtor, and he did just that. And his $345,000 house sold for $352,000. But here is the moral of the story. The news, the neighbors, the MLS, the local realtors, the gals who talked down at the bridge club. The only thing that was reported that the homeowner had to drop his price by $50,000 to get his house sold. but that is false. It's true, but it's false. The home was overpriced. And so what's happening is that the deflation in the market that you're seeing is not homes being devalued. It's not homes going down in value. It's the air being let off the top. It's the icing being scraped off the top of the cake. You no longer have to pay $20,000 over asking price to get a house. And that brings us to why you have to convince your buyers that they need to buy now and not later. Because again, there's no end in sight to the inventory. And the interest rates, listen, I've been telling people for the last year that interest rates were going to come down, first quarter of 2024. I don't know if I believe that anymore. I don't know what I believe these days, but I can't imagine that we'll go through an election cycle with 7.5% interest rates. I just don't think that that's practical. So hopefully we get some relief to the interest rates soon, right? But we can't push these people forward into homes under a premise of something that we have no control over in the future. So I'm not a fan of the, marry the house, date the mortgage line. Like if they need to be prepared for what this is and hope for some improvements in the future. So just to finish off that conversation regarding, oh gosh, we're gonna have a bunch of foreclosures if everybody loses their job and all. Yeah, hopefully not, right? But listen, look at this. This is 2008, 9, 10, 11. Okay, guys, we're nowhere close to that. Nowhere. Nowhere close to that. We're still way less than the peak of the economy back in 2019. Way less than that. Because of all the slides that we just went through, the equity. You don't get foreclosed on anymore. You list your house and sell it in a weekend and walk away with 200 grand if you can't make your mortgage payment. So, I want you guys to have confidence because you have to believe this stuff. You can't believe that you're selling people or like you're enlightening them. You're helping them come to reality. You're not overcoming objections. You're enlightening. I posted this on my Facebook page. I just thought it was classic. And I think I wrote somewhere along those lines of, there's still room on this big wooden door. Unlike Rose, I won't let you die in the freezing water. And it's true. It's true. The person who's waiting is the person who was waiting a year ago is the person I can no longer help today. Don't make the person who wants to wait today the person I can't help a year from now. So I'll try to do what I can to help you overcome the interest rate objections. The reality is that my own business is down 75% from the peak. 75%. So it's a very real objection that there's not a lot we can do. And so we have to find different ways to look at and perceive the problem. Okay. And so for an example, one common thing that happens to me all the time is I'll talk to a client who's concerned about the interest rates and the payments, rightfully so. This same client is putting 30% down, or even 20%, or even 10, okay? 10% down. But this same person has $20,000 in credit card debt at 25% interest rates, and the payments, the minimum payments on those credit cards, $300 each. You got 20,000 of them, so the payment's about $1,000. And they will come to me and say, I want to put 30% down,
Pretty good.
but I don't like the interest rates. I don't like where my payment is. And we say, well, why don't you put less down? Well, my payment would be too high. And it's amazing to me how many people never thought that maybe instead of putting 100 grand down on their house, they could take 50 grand and pay off their debt. And just put 50 grand down on the house and maybe even carry a mortgage insurance policy. And maybe their mortgage payment is $500 more than they wanted it to be. but they no longer have $1,000 in revolving debt, and their outbound monthly cash flow has reduced, even though their payments were way higher than they ever wanted it to be. People don't think about these simple solutions to problems. Hey, buddy, that's cool. You want to put 100 grand down. Listen, I know you love your car and you got a 2.9% interest rate on it, but the payment's $1,100 a month. That is the equivalent of 180 grand in house that you don't qualify for. So let's pay off your car, put a little bit less down. Yes, your payment's going to be a lot higher than it could have been, but your total outbound spend is less. I've saved you money and got you the house. So these are really the only things that I can do. Is not that I don't have a magic wand. The only thing I can do is help people perceive this problem differently and look for solutions where other loan officers who are just trying to sell an interest rate or whatever it is. So, but back to the slide, the reality is that these rates aren't organically high. Our economy hasn't been doing so, like, this isn't organic. It's not natural. It's not the product of economics. They're being manipulated, good or bad, up in an effort to get inflation under control. So one would think that once they get inflation under control, they will manipulate them down, or at least remove the restrictions that will allow them to naturally move down. When they do, everybody jumps back in the pool. And now you're elbowing people to see a house. There's 15 people at the open house. If you're not offering 25 grand over ask price and waiving your inspection contingency, you're wasting you and your realtor's time.
It's so pretty.
We can get seller concessions. We can do point buy downs. We can do recasts.
Mara, you're
All
not
kinds of
muted,
tools in
Mara.
here to help us. So, I really think that your job is to help people see this and that they need to get in now, take advantage of their equity growth and an opportunity to refinance to a lower rate someday down the line, hopefully. Right? This is a fun slide. Now versus later. Guys, before we get into all this gory math, the moral of the story here is that the difference is so insignificant in the grand scheme of things that your clients are spinning their wheels for no reason. No reason. So just look at this, okay? So now, in this market as it exists today, and I realize that, I've manipulated these stats a little bit to help the point, but I see homes under contract for a few thousand under list price with seller concessions all the time. So I don't think that this scenario is out of the realm of reasonable. So a $425,000 home, our borrower's got a 740 credit score, which in this market gets him a 7.75% interest rate. Woo! Now the home, their awesome realtor got them the home at $5,000 under list price and negotiated a 2% seller concession. We got $8,400 of the seller's money to play with. We're going to use it to buy our rate down, get it a little more palatable, a little more easy to stomach. 6.875 still sucks, but it's better than 7.75, and we didn't have to pay to get it down. So your 10% down payment's 42 grand, standard closing costs, total out of pockets 48 grand. After the if you know these last two stats are irrelevant because no one keeps their house for 30 years, but if they were, you can see they would spend close to $942,000. Now they got to move into their house today, no lost equity, and when rates do fall, they're a phone call away from several $100s of relief in payment versus waiting, getting nothing, and then having to fight everybody off to get a couple $100 savings in payment from what they could have got today, not realizing when you look at the right column that they're not saving anything. Because 6 months or a year from now, that same house is more expensive. Would we all agree? I didn't go crazy. I gave it a 5% appreciation. We had 27% appreciation in 2020, you know. I think 7% is standard historical. So I'm projecting below historical standards, 5% appreciation. That same house is now 450. But guess what? Because interest rates are so much better, you can't get a 2% seller concession, and you're not going to get it for less than list price. You're going to pay $10,000 more than the appraised value to get it. So look at how this math breaks down. Yes, your payments comparable. Loan amount, you're borrowing more money, you're putting more money down. You had to come out of pocket 10 grand for that appraisal shortage. You came out of pocket 13 grand more to save $10 a month in payment. What are we doing? Meanwhile, you lost out. That $25,000 of equity appreciation was yours. And so was that year's worth of mortgage payments to your principal. Now it's not. Your landlord kept it. And the person who bought the house because they weren't going to wait got that equity growth. So, and if you notice, these numbers aren't that disparate. It's still better to buy now, even with this rosy scenario on the right. And even like we're talking about $10 in payment, $13,000 out of pocket. You know, you can sell your house now and make some good money on it. So I just don't see a reason why anyone should wait. I mean, I truly believe that, especially for the lower end, it's buy or die. And I hate to say this, but our jobs are trending rapidly towards catering to rich folks. Because if this keeps going in 5 years, only the wealthy will be buying houses. So we got to hope for some relief in the interest rates because we are not getting any relief in the home prices. All right, now starts the commercial. Okay, I'll keep it short, but go local. If you don't understand the value of having a trusted lender as a partner in your business, you are doing yourself a great disservice. I think as a realtor, it's probably one of the most important tools you can have in your belt. And there's a lot of us out there. And the reality is, if you're referring more than one, you're referring none. You should have a person that you are crazy about, someone that you insist your clients call. And that's not a violation of RESPA, by the way. You're helping them by ensuring that they don't get stuck with a bad actor, because there's a lot of them out there. We could have a whole nother show, a whole nother meeting about just the differences in all the different mortgage companies and the loan officers. So I have been a stiff corporate suit for the banks. I wore a tie to work every day, put a mask on every day. And I got to a breaking point where not only was I not taking great care of my clients because of all the political bureaucratic nonsense that happens at these corporations, but I was unhappy, you know? And so I'm independent now and I got more skin in the game and I'm a real person, not a stiff corporate suit. I'll just leave these reviews up while if anyone has any questions. Elena.
Yes, I guess what I've been facing with any home that is below 500,000, getting a seller's concession, just because there's so many offers on the table and you're competing against so many people that I feel like asking for seller's concession is not always the right call, even though it would greatly help the buyer. What would you suggest?
It's a valid point, and I will tell you that what I've noticed is that when rates move up, activity ceases until people start to get used to the new normal, right? And to your point, I think that when rates shot up and sellers couldn't sell their houses, they're like, oh gosh, we better let some seller concessions go to help get this house sold. But now rates have been high for a while. The market's been what it has for a while, and this is now the new normal. And so sellers are realizing that, oh, maybe I don't have to give concessions. It's a valid point, and the only thing I can tell you is if the appraisal will allow, offer over ask price. Go over ask price, but ask for some of the difference back in concessions. Or call me and see if we can get the deal done in 12 days. Or maybe we can pre-underwrite them and have them to the point where we just need an appraisal on the title report. We'll close in 7 days. You
Okay.
know, there's not a lot you can do for the client who needs the concession.
Mhm.
The client who would like to get the concession and would be helpful to have the concession, a little easier. But when you need it, it's a little more difficult. And so again, but this is more reasons why, again, buy now. Because if that house goes up, if your debt ratio is already to the point and your savings is already to the point where you need concessions, how's it going to get better? You know,
Wow.
there and oftentimes too, how like just talking to me, like maybe that person has a $300 car payment, you know, and we can go refinance that car payment. And now that payment's $180 a month instead of 300, and that helps with that 120 increase in the payment.
But is
You
it
know?
car interest payment also went up? Like the interest for the cars went up also?
Yep.
Okay.
Yep. So, but paying off debt, sometimes just moving money around, you know. Another big thing is, you know, mortgage insurance. So, like, let's say you have someone that wants to put 5% down, you know, or 10% down. And, you know, you only have to put 3% down as a first time buyer. So if we can use the other 7% that they've been fortunate enough to save to improve their monthly finances in another place, that's the best thing I can do for them. Because the interest rates are just a math problem. You know, it's here's the house, here's the rate, here's the term. It's just a math problem. Here's what the payment is. None of us can do anything about it. So again, I think it's just helping them, and it's not easy, just helping them perceive the problem at hand in a different way. You know, I hate to say it, but you have to do one of two things. You have to either instill confidence or instill fear. And both are real and both are valid. And I don't think there's any shame in instilling either of them because to me, they're real. I believe it. You know, it's only going to get harder. People ask me all the time, Greg, aren't you thrilled with what's going on in the housing market? It's got to be great for you. No, it's terrible. As a homeowner, it's been awesome. But as a loan officer, 50% of the people that I could help, I can no longer help. You know, the single mom that makes $18 an hour isn't able to buy a house anymore. I could help that person 18 months ago. You know, and I don't see any relief in sight. Aside from the Fed dropping rates, I just don't see how it's going to get better. So we got our work cut out for us. That's for sure. And I think loving on people is the answer. Educating people, loving on people, being real with people. And I think I owe a lot of my success to that. Just talking to people like they're real people. So that brings my presentation to a conclusion. Thanks for watching.
Anyway,
And
you
can
could
I answer
email
any
those slides.
questions?
Is
Sure, Steve, what's up?
there any way you could email those slides?
Sure. Yeah, it's a PowerPoint So I'll send it tomorrow.
Probably good
Cool.
material for social media stuff.
Yeah,
Thank you. Yeah, if you could send those to me, Greg, and then I can get them out to everyone and upload them in with the training, that'd be awesome.
yeah, my pleasure. And
Awesome.
there's my contact info, how to get a hold of me. Happy to answer any questions you or your clients might have. And Mara and I have done a deal together, and I think it went well. But she doesn't know me super well yet. But I think that if you noticed today, you haven't heard me talk about any gimmicks. I haven't talked about down payment assistance programs or 2-1 buy downs, or I have all those things and they're all viable products and solutions, but I don't I I'm about building relationships with people. I'm about talking to people real. And that's the value that I provide is when you send the client to me, you have full confidence that they're going to get educated. If they're a buyer, they're going to buy. If they're not a buyer, they're going to be put on a path towards buying, and they're going to be taken care of. It's one thing that you could just cross off your list of things to worry about. I don't want to come here and teach you guys about loan programs or debt ratios, or you don't need to know that. Send them to me and know in full confidence that they're being taken care of, and that if there's a homeowner in there that we find it, right? And send them to you with confidence, because everything that I just shared with you, I'm sharing with my clients when I'm talking to them, right? I am instilling both confidence and fear in my buyers because I have to. It's my job. So I can't really put into words the value I provide. I think that you have to experience it. So give me a shot. I'd love to take great care of you and your clients. 80% of my clients come back to me, which is awesome. Like, think about it. I'm in a commodity-based business. My own father would refinance with a different lender if they had a better interest rate than me, right? I've managed to retain 80% of my business, which means that if they refinance or if they buy another home, they're coming back to me. 1 in 5 I lose. And I probably lose into some scuzzy flyer they got in the mail or something. But so I do the same thing for my agents. I know many of you guys aren't the best at keeping in contact with your book of business. Well, know that if we partner on a deal together, I am communicating with them and I am representing you when I'm communicating with them. So even if you're not following up with them, I am. And when they come back to buy another house, the first question I ask, did you call your realtor? Right? And if they say no, I don't like that realtor, they didn't keep in touch with me, then guess who has a lead for one of his realtors? Keep in touch with your contact base. I do. All right. I've talked too much.
Thank you.
Yeah, my pleasure. Anybody else have any
Thanks,
questions,
Greg.
comments?
No, thank you. If you could send me the presentation, but I really appreciate this. We'll get
Yeah,
another
that's
class
great.
with you.
Yeah, my pleasure. Thanks for having me. All right. See you guys.
Bye, thank you.
Thank you, everyone. Bye.